What to do, Airheads? You're here back for another video. This is part 10 in our Mastering Technical Analysis series. This series, in a nutshell, is my trading strategy. This is how I approach the market, and we're building on it one video at a time, and hopefully it helps you. So today, I asked for some input in Discord. I asked people, what do you want to see the next couple videos be on? I got lots of good suggestions, and we're going to knock them all out. But the first suggestion I'm taking is from Netta. He wanted to see my take on plays around support and resistance levels. And he's talking about three scenarios here. So the three scenarios are: you buy support, you sell resistance, versus short breakdowns and buy breakouts, versus buy retest. There's also, sell retest or sell fakeouts as well. He threw in a caveat. He said, if they are a relevant part of your trading style, of course. They are probably the main part of my trading style. So we're going to cover that today. We're going to start with explaining how to find support and resistance levels. We did a video on this, but it wasn't a deep dive. It was a mixed video with lots of trading strategies. So we're going to talk about how to find support and resistance levels today. We're going to talk about how to find entries, the three scenarios he talked about, stop losses. It's going to be an action-packed video full of just phenomenal information that you need to know as a trader. However, if you are just finding us, this is the first time you ever seen my face, hit the playlist in the description below. Start at video number 1. There's only 10 so far in the series. Get caught up. Don't just power through them and watch them all. Like, spend time on them. Here's the thing, right? These are good for beginners, intermediates, and experts, right? This is going to give you a good foundation if you're a beginner to build your trading house on, right? Gives you that foundation. We're laying the cement for you. If you're an intermediate or an expert trader, you're going to pick up something in one of these videos. I pick up stuff still, right? I consider myself a good trader. I do this for a living. This is my job. You can go to video number 1 and see what I'm talking about. However, I still learn, right? I'm still picking up things from other people every once in a while. So great series, great start. Lots of information in this video. Do me a favor, smash that thumbs up button. It helps me out. Small growing channel, broke away from a larger channel, helps us out. Makes Discord show it, or YouTube show it to more people. And then discord.gg/Alpha Aere. Hop on in. Let's just get right into the video. So when I explain any of this stuff, my main focus, my passion is crypto, but anything that I'm talking about in this entire TA series can be used with anything, any commodity, any stock, any Forex. It's TA is TA, period. So let's just get you the basics out of the way first. So we know why price moves, right? It's supply and demand. When demand is greater than supply, price rises. When supply is greater than demand, guess what happens? Prices fall. Sometimes prices move sideways when those are in tandem or equilibrium with each other. Like many concepts in TA, the explanation and rationale behind technical concepts are relatively easy, but their mastery, right? Their mastery can take years. And this is something that I have been saying more and more lately to try to cement this and hit it home is that last sentence, right? So the explanation, so what I'm doing throughout this series and the rationale behind TA concepts and technical analysis are easy. Technical analysis is easy, but the mastery in their application often takes years of practice. It took me 2 or 3 years before I mastered them, right? For me, the harder part was the discipline and the patience in learning that stuff. All the stuff from video number 1, right? So TA, people who do TA, technical analysis, use support and resistance levels to identify price points on a chart where the probabilities favor a pause or reversal of a prevailing trend. Support occurs, right? Support's underneath the price. So it occurs where a downtrend is expected to pause due to a concentration of demand where buyers step in. So resistance occurs, right? The flip, it's the point above us. So it occurs where an uptrend is expected to pause temporarily due to a concentration of supply. So you've heard me talk about market psychology, but it plays a major role as traders and investors remember the past and react to changing conditions to anticipate future market movements. Now, I'm going to expand on that a little bit. You're not going to always find support and resistance levels on Bookmap. You're not going to always find support and resistance levels on some kind of liquidity program, right? Some kind of heat map program. You're just not. You're not going to be able to look at a liquidation heat map all the time like this and find those support and resistance levels. Sometimes those support and resistance levels are psychological. And I know you guys have heard me say that before. Psychological support and resistance levels based on previous support and resistances. You know, good traders who are trading and do this all day long for their job, are staring at the same charts I am. We all see the same thing. So we're trading it accordingly. And we will break that down further later on in the video. But support and resistance areas can be identified on charts using trend lines, moving averages, and a lot of other indicators, which we'll talk about. So I'm going to use this a lot throughout the video. This was a 73-day trend we were just recently in from the beginning of April, when spring started, to really the start of summer. This was like June 18th when we got the breakout to the top range. So what is support, right? So quite simply put, it is a zone, a level, a line, a moving average on the chart where buyers show a willingness to buy. So this trend line held up for 73 days. That was a very strong level of support. So price comes down in a downtrend. That is an expected area to get a bounce off of. And we did for 73 solid days. On the flip side, resistance is a level typically above us, always above us, not typically, where price shows sellers willingness to sell or take profits or short the market, etc., etc. So it's just the reverse, right? So price going up off of support, you hit your resistance, people take profits, sellers sell, and we come on back down, rinse and repeat. Support and resistance levels can be found on every single time frame out there, monthly, weekly, daily, all the way down to the 1 minute, right? I mean, we had a pretty strong trend line, right there, that lasted us the entire year until last week, right? I don't know if you guys remember what happened last week, but strong trend for an entire year. So this line held up for a whole year, right? Now, one could probably make another trend line here where we tried to break out, but historically that acted as resistance. You got that kind of fake out breakout, lost it, came right back into the bottom of the channel, right? So you can also drill in to smaller time frames. So this is just a 1 minute chart within that larger chart, right? So you can find support and resistances anywhere, right? I mean, you can take them and draw your support and resistances wherever, right? I mean, look at that. There's a nice downward channel where we bounced, where you could have scalped on a 1 minute chart. This is like scalping, right? Very, very, very simple. I mean, this channel was about 0.2%. Great channel to scalp. Up, down, up, down, up, down, broke through, price rose. But at that breakthrough point, you had lots of confluence, right? We had the crosses of all the moving averages above the 200 moving average. So my point is, you know, you start charting, looking for trends on the bigger, you move to the smaller, all the way down. There's trends within trends. You might be in a larger trend play off of support and resistance levels, but want to do some scalping when you kind of dial it in. It is very important to chart all the time frames and know what the trends, where the support and resistance levels are on every single time frame for when you are scalping or looking for breakouts or looking for those larger, longer time frame plays, or on the flip side, shorter time frame plays. Obviously, the larger the time frame is, right? The larger your time frame, the stronger that support and resistance is. Typically, a trend starts when 2 candles touch. The more touches you have, the stronger that trend is. The longer time frames, the stronger that support and resistance is. The more likely it is to hold up, the more likely it is to become major support and resistance. There are lots of ways to find support and resistance. Some of you guys probably know or have seen me chart in the past where I'm to the point in my technical analysis career now where I can look at a chart pretty quickly and eyeball support and resistance levels that play out, that somehow magically when price hits it, we get a bounce off of them. And that's an acquired skill. You know, you don't worry, you'll get that after staring at charts for, you know, hours and hours and hours a day for years on end. One day it's just going to click for you. And I know you probably heard me say that before, and other traders say one day it just kind of everything started clicking for them. But we utilize past history of support and resistance. What I mean by that is all of what happened in the past here, right? So if we go to the daily chart and we want to find some strong support and resistance levels, well, we know that this right here, just looking at like this bunch of candles back here, here, that was support and resistance. And look how it was been support and resistance for this most recent run up, right? Touched it, got rejected. Touched it, got huge rejection. Touched it, broke, blew through it, came back down, tapped it right here, right? Blew up, came back down, and this is that most recent downturn where that's where we stopped dead in our tracks. So that's what we mean by identifying support and resistance levels, major, you know, and this is higher time frame stuff here where you got to look at this stuff where this might not be seen on like a book map program. It might not be seen on a liquidity program. This is what we call like the more psychological or historic support and resistance levels. Another way to find support and resistance levels is using some type of order book program or liquidity heat map, right? The thicker the color, I mean, here's your legend here, right? So from least amount of orders to most amount of orders. So the thicker, you know, more bright the color is, the stronger that support and resistance level becomes. So these are all literally support and resistance levels where you as a trader need to know we could get a push or a pullback. So if we blow through 25,500, the next level I'm looking for is 25,400, 25,300, 25,200. And then what I do is every single morning when I'm dissecting the markets, I plot these all Alt-H, right? All of those levels on the chart, right? Every single one of them within the range. I don't go too far above us, right? I would definitely stop, a few $1,000s away or a couple $1,000s away from where we're at. You chart those out on here so you know where support and resistance is. Now, on top of that, you also need to look at liquidation levels. And you can play around with the colors and stuff on TradingView, right? Like typically I make the resistance or support below us red, the resistance above us blue, and then I make the liquidation levels like an orange or a yellow color. But you need to use both. You do. If you want to be a good trader, you need to know where the liquidations sit because we're going to chase those liquidations, right? The market wants to stomp those out. Market makers want to stomp those out. You need to look at the order book because those orders want to be filled. This is supply and demand. This is how the price of Bitcoin gets made. So, within our range, this is about a $1,200 level between, 26.8 and 25.5. And you got a few little notches in there, which you could plot out. So you don't have to get too crazy with this. Usually I say do it for $1,000 above us and $1,000 below us. Plot this out on your chart so you know where to look for potential bounces. Look, there's 100 different liquidation programs, order book programs. My favorite's Bookmap. There's Trading Light, Trading Different. There's lots of liquidity programs. I'm starting to like High Block Capital. It's in beta right now. I'm testing it out. They have a lot of offerings, right? A lot of stuff that you can dissect the markets with. You got to find the one that you like and that works with you. I know some traders personally who don't like Bookmap, right? You don't have to like and use everything that I use. My trading strategy is mine. It works for me. If you're going to just copy my trading strategy and think it's going to work for you, you're probably going to have a bad time. You need to find one that works for you. What you can do, though, is use mine as a foundation to build your trading house on, like we talked about. Another great way to find support and resistance levels is with the fixed range volume profile tool, right in your tools here, fixed range volume profile tool, but also to throw on the VRVP, visible range volume profile indicator. That is another great tool to have on. And VRVP, throw it on there. There you go. It shows you the visible range, right? So what you're viewing, the volume profile. This is historic volume in that range. The first thing I do when I throw on VRVP is come up to a little settings cogwheel and an extra 0 there for the row size, so you can get a little bit more dialed in. You see how that changed there. So what does this tell me? Well, a couple things, right? So typically speaking, when you see a historic volume gap like that, more often than not, that repeats itself. So if we break up to like 24,698-ish, right around there, where this little indent, right? You can see it there, sticks out, some heavy volume there. If we get to momentum, we can push through this. It's possible we skirt all of this, right? We come on right up to the next thick level of previous support, previous resistance, previous trading activity. So where there is serious trading activity, typically price tends to stick to that for a while, right? Like we did here. I mean, this was many days we stuck into that range, right? You can see that volume gap there, which we skipped right there. And then we were stuck in this next range for a while. So this is how you can find support and resistance levels with VRVP. This is where buying and selling occurs. This is where traders look for potential more down or upside. Sometimes you'll hear me say, well, if we lose this level, which in this case was about 29,000, and there's many ways you could come up with that 29,000 level, but in this case, you know, there's potential for a large downside, and we got it, right? We got that huge downside on last Thursday the 17th, I should say. So this is how you find those levels without having to look at a liquidity program, but sometimes these levels are psychological, right? This is where those psychological levels, because other traders are looking at this volume gap here as well. Now keep this in mind too. So the more of the range that you see on your chart, right? Since this is a visible range volume profile, the volume changes. Now, my favorite tool to use is this, the fixed range volume profile tool. I have it favorited because I use it so much. So I click it here, and then you can just start. It's from candle to candle. So you click the candle where you want to start, which I want to start at this downturn. So I want the volume profile of our current range, and you drag it all the way to the most current candle, and boom, there's the volume profile of this current range. It gives you the value area high, which is the highest value area of this range. The PLC point of control, it's where the most volume occurs in that range, and then the value area low, and you can change all these colors and everything, but which is the low value area of that range. Now these are support and resistance levels. These are the same things that other traders are looking at. You're not going to always see these on, again, Bookmap or liquidity levels. This comes into scalping, day trading. You might not find those things on Bookmap. So it's good to have this thrown on your chart at all times for the current range that you are in. So if we dial this in a little bit, like if we go to the hour chart, and here we go, right? Same visible range profile. You know, you can see how this has acted as support, the value area low, right? You can see how this has acted as resistance, the value area high, here a bunch, here a bunch. And you can see how the price has hugged the POC a lot in this range. Hasn't been a lot of volume, so it's kind of just hung out in the POC. But you can see where the POC, I mean, just look at this, right? Smashed into it, couldn't crack through it. So this acted as resistance, fell back to the value area low. Finally cracked through it. Looked like we can get a breakout. Didn't happen. Retested, came back in, retested the value area high here, lost it. POC, right? Lost it, came down, pumped up, down, up, lost it. And then here, couldn't really crack it, and kind of just been hugging it all weekend. You can see how these levels, when we start approaching them, you need to pay attention, right? So typically I say, you know, you want to long, I don't say this is the saying, but you want to long your support and you want to short your resistance levels here, right? So long, short, but you want to pay attention to what happens at the POC, because we might not make it to the support. You might get that bounce off the POC. This isn't really a great range, right? Because it's just been so crappy after a huge dump off, but more often than not, right? You're going to bounce down, lose it, right? It's going to use all these levels until you break up or down in that range. So there are lots of ways to come up with these levels, from, like we talked about, the liquidations. We talked about the order book. We talked about VRVP, fixed range, you know, previous support and resistance levels. If you don't have lines on your chart like this, and I know it's ridiculous, but this is how you got to trade. You got to know where these levels are. It might not be this extreme. I just threw these on there randomly just to kind of show you That if your chart doesn't look like this, you don't have this stuff mapped out, you're gambling, right? It's 50-50, pricing can go up or down. I mean, your odds are better at the casino if you don't map this stuff out. And here's where it gets even sketchier, right? This stuff changes. It changes constantly, right? There's new orders coming in, so you got to stay up on this stuff constantly. Not so much the liquidation side of things on smaller time frames, right? But the order book changes all the time. So you know, maybe the 26,273 just disappears, you delete it, right? Maybe this disappears, you delete it. Maybe something gets added here, so Alt H for horizontal line, you know, changes to the color that you need to know what it is, etc., etc. Stay organized with all this stuff. Use your object tree, this little symbol down in the bottom right-hand corner of my screen here, right? Click it. You can hover over any of your things here, add a folder, right? Boom. This little folder thing here. You can rename it whatever you want, like current range, drop them in there, right? Drop all those lines in there, everything you just charted, brushes, fixed range, horizontal line, and then look what happens, right? Here's all your indicators, everything on your current chart, right? So they're all in a folder there. I can just hit it and they all disappear. I can just show, right? Pretty cool. Stay organized. And remember, with the psychological support and resistance levels, so market psychology plays a major role as traders and investors remember past and react to the changing conditions to anticipate future market movement. Shifting zones, we just talked about this, of resistance and support can be revealed by understanding the sentiment and emotion of individual market actors and how that aggregates up to the market. So this is psychological. That's why you gotta have all this stuff factored in. So psychological levels are a price level that is perceived as significant by traders. Round numbers, previous history, right? So, I mean, just look at the order book, right? I mean, it's typically in round numbers, right? 25,550, 24,800, 25,000, right? 24,000, 23,000, 22,000, 21, 20. So you see what I'm saying? So even $100 increments can be, you know, you don't have to map out every $100, right? But you kind of get the point there. So they reveal price points in financial markets that hold significant meaning for traders and investors, mainly due to their simplicity and ease of remembrance. Zeros, 1.0. This is just psychology, right? Why do psychological levels matter? They are important because they can influence the behavior of traders. The human brain is naturally inclined to seek simplicity and order. In trading, this tendency results in a preference for round numbers and other easily recognizable patterns, right? So we're not just talking numbers, we're talking easily recognizable patterns. So when we say that a shoulder, head, and shoulders breaks out 88% of the time or whatever it is, right? That's a psychological thing. That's in all of our heads, right? So that's typically why that works out. It's also typically why Fibonacci levels work out. I'm not going to explain what the Fibonacci sequence is. Google it, right? But it's found in everything. Nature, trading, everything, right? So universe, Fibonacci is used in trading. So for trading, we use it to find kind of the golden pocket or the golden ratio, right? So in an uptrend, so let's take this entire year so far. Let's go from the low. And here's the thing. You want to literally drill this in. So let's grab that again from the lowest point. So when you're in an uptrend, you want to go from low to high. So there we go. That's low. I'm going to go all the way up to this highest point. Back over here, which was 31.8, that recent level, right? And you want it to be 100% on the top of that candle. If you need to drill it in more, you can see I missed it there, right? Drill it in right to it. Don't, like, literally right to it. No wiggle room. If you have wiggle room, the whole Fibonacci sequence is going to be off and you had the wrong levels on your chart. So make sure you're drilled and dialed in beautifully. All right. So the golden pocket is between 6.5 and 6.18. And on your Fibonacci tools, what that is considered is the golden pocket or most likely area of retest. So we haven't even hit it really. I mean, with the exception of here, right? But all these levels, every single one of them are support and resistance levels. Now, you don't have to go back the entire year, right? But in an uptrend, you go from low to high, right? So in a downtrend, so let's just get rid of this Fibonacci sequence here. You want to go the other way. So we want to take it from that Thursday, right? So here, this is the Thursday candle. I'm just starting it back here. I'm going to get right to the wick there on my Fibonacci sequence. So there we go. Draw it to the lowest point. So in a downtrend, you want to go from high to low. In an uptrend, you want to go from low to high. So here, if we get that bounce, you can look to the possible golden pocket right here. But also, any of these levels on here are support and resistance levels, or you could get a bounce one way or the other. So these are all support and resistance levels. Everything we've talked about so far are support and resistance levels. It's a lot. I know it is. Nobody said this was going to be easy, but it is. All you got to do is draw them out. Right? This is like to make money, to sit at home all day in your underwear and stare at charts instead of sitting in some cubicle somewhere, or, you know, rushing into a burning building. I mean, some people like being firefighters, but, you know, it's work. It's not hard. It's not hard to do this stuff. The hard part is overcoming your mental, you know, your mental blocks, the discipline, the patience stuff like we talk about, and actually sitting down and doing it, right? And that's the hardest part of anything, working out, you know, anything. So all these are support and resistance levels. There's many other ways to find them. Moving averages, you know, RSIs, oversold, undersold, et cetera, et cetera. These are the main ones. And it's up to you to kind of find some other ones that work for you. But these are the main ones that you kind of need to know about, right? So now we're going to kind of move on to more like strategies, breakouts, things like that. Now that we've kind of, there's a long roundabout way to get to kind of what is support and resistance, why it's important, and ways to find it, and talking about psychological resistance, right? Now let's kind of put it to test. So now let's get into the meat and potatoes of it, right? Let's talk about buying support and selling resistance as our first kind of foray into putting this to practical use. So after you've charted out, right, everything that you need to chart out, so from the fixed range volume profile of the current range you're in, like this, you start to get an idea of support and resistance levels based on liquidity, right? Like these white lines here. I'm just drawing them here to kind of show you. This is a general rule, right? So you got all your lines drawn out, whatever, wherever they are, your red lines, your blue lines. You know where your support and resistance levels are, your volume profile, the liquidation levels, all that fun stuff. And you have your trend, right? You have the current trend that you're in, while keeping in mind the support and resistance levels based off the order book, the liquidity, the volume profiles, et cetera, et cetera. So generally speaking, right, you take longs off of support in the trend. You take shorts off of resistance in the trend, while keeping an eye on the support and resistance levels along the way. The volume, value area high, value area low, PLC, the order book, et cetera, because you might not always make it to the bottom of the channel. You might get hung up on support and resistance. So the flip side to that is you should never, generally speaking, of course, take a short off of support or a long off of resistance. Now, there are some exceptions to this rule for experienced traders who might see something that you don't see, right? But generally speaking, this is why it's important to know these levels. There's a lot of people out there, inexperienced traders, who take trades. They go long because they see the price of Bitcoin is going up. Well, the price of Bitcoin is going up, and you take a long here because you think it's going to continue to go up. Look what happened. It went down because you just took a long off of resistance. And this can be found at any time frame, right? For the purpose of this video, we're looking at the daily time frame, right? But you can drill into and do scalps. You can find trends within trends as well. But you need to know where you're at on all time frames. Now, let's take a look at some breakdowns, right? So you can see here, right? You took a short, top of the channel here, right? You go short. You come on down. You can see where this level acted as support, right? Eventually, we lost it, right? And then we lost it all the way down to the bottom of the channel. And then we came up, and we spent several days. We spent like 2 weeks, right? Not going to the top or the bottom of the channel. So this became support and resistance. So you could still have traded this, right? That's why it's important to find trends within trends as well, to where this line acted as your resistance, this line acted as your support. So if you continue to trade it within this channel, eventually you're going to get that break up to the top of the channel again, right? Where you would then short it again. And then guess what? That previous level we were just in acted as support again, right? Then you're going back up. That same thing. Take a short, come right back down to the bottom of the channel, and then look at that next day, right back to the top of the channel. And then guess what? Not all the way down, came back up, right? Down, and so on and so forth, till eventually you catch the breakout. But not only did you catch that breakout, you got all these wins along the way. So I think the buy support and sell resistance is an easy concept to grasp, right? Finding entries and setting your stop losses accordingly is harder. That's what we're going to talk about now. Now, keep in mind, this everything I'm talking about here is what I do, right? It's probably what most people do as well, but it's not what everyone does. This is just what I have found to work for me. So even if, you know, my trading strategy doesn't 100% mesh with you, you can definitely take something away from this. So a trend, you try to hit as many points as you can. So it's not necessarily from wick to wick, right? Or from candle body to candle body. It's going to utilize both. You want as many points to touch as possible. For stop losses, I then go from wick to wick, and it's not always this pretty, but this trend was very, very, very pretty. Same thing on the downside, right? So when I am entering into positions, I know that my stop loss needs to be above this line. And this channel is about 1%. So if I'm 5-timesing from the bottom, and usually on these larger time frame trades, right, I am 5-timesing. Sometimes I'll do more, sometimes I'll do less. It just depends on the situation. However, so since it is a 1% channel, right, this stop loss channel, I call these, which is from wick to wick, that's a 5% stop loss right there. So that's how I figure out what stop loss I need to enter. I might throw in another percent or two on there, right? So if I need 5%, I might give myself 7% for a strong trend like this that went on for 70 something days, right? But that's how I figure out the stop loss and my entries based off of the trend. And guess what? This works for any type of support and resistance. So for your support and resistance levels, you want to, again, try to get it. Obviously, if it's a bookmap thing, right? So if it's support and resistance levels, like if it's right at 26,800, you want it to be 26,800. However, sometimes you get some wicks through it, right? So like 27,450 here was a level. You know, we got some wicks above it, but you know where to set your stop loss above the wicks, right? Right above the wicks is where you set your stop losses. Same thing with the downside. Now, sometimes they're a lot heavier, like this one here. You better get a good entry, but this is, you wouldn't short the support. So that doesn't even come into play here. My point is you can drill in. If you are in the middle of a channel, it's possible to take entries based off of support and resistance. But you need to have the patience and discipline and wait for it to hit that support or resistance level, the order of liquidity, the order books. You got to wait till it comes to you. The price will come to you, I promise you. Me personally, I don't enter into a trade if I need to have a stop loss bigger than 7%. Now, you're adding risk when you take on anything, any type of leverage, you're adding on risk, right, to your stop losses. I never enter into a trade without a stop loss. I personally think you're an idiot if you do. Plain and simple. That being said, if we were in this channel and I wanted to 20 times this, which I did on some circumstances, you're just taking on more risk. When you take on more risk, the chances of you getting stomped out of that play are greater, but the rewards, it's risk versus reward, right, are going to be amplified even more. So your entries need to be squeaky clean in order to take on 20 times leverage. And if you're a new trader, you have no business trading 20 times leverage, you know that. Stick to 1, 2, 3, 4, 5 if you really need to. But your goal should be honing in on your entries, setting stop losses accordingly, and being able to read and chart properly. That's your goal when you first start off. You're not going to have a Lambo overnight. It's going to take it. I just went over my trading strategy this morning with people in Discord. It took me 7 years to get to the point that I'm at, right? There's 2 years in there, that I was started to make money, but to get to the point of becoming well off It took 7 years. It took a long time to get to where I am. There's a video on the channel if you want to check that out. It's called Discord Sunday Hangout. It was posted on the 27th of August. But that's what I'm talking about. Let's back test this a little bit. Let's do the replay mode, right? Click replay up there. Let's take it back to right there. Boom. So this is what this chart, I mean, minus these lines, but this is the data that we had at the time. So you had your value area high, your POC, your value area low, and then support and resistance levels, the start of the trend, right? So what do we want to do? Well, we want to take a short here. Why? Well, a couple reasons. So we hit the value area high, right? Top of the trend line. That's probably a good spot to hit a support. You would have seen liquidity levels, all that fun stuff. So you enter into a short position, right? Now, typically speaking, you want your stop loss to be above some recent candles, right? Some recent wicks. So you kind of know where to set your stop loss accordingly. But it looked like we were going to break out of this trend, but not really because it hit that POC, right? So you enter into a short, and then what happens, right? Let's play it out a little bit here. Boom, 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 boom. Right to the bottom of the channel, right? I mean, we literally hit the bottom of the trend. And no, this was new because we lost the value area low here. And it starts to grow as the channel starts to grow. The value area starts to change a little bit. The POC starts to change when you make lower lows. So does the value area high when you make lower lows, and the POC. All of them change, right? So you need to realign, readjust. But you just won that trade. Stop loss wise, right? Here's what I do, right? Like let's say that this is my stop loss, right? On this particular candle. As we start moving down, I move my stop losses down accordingly, but I give myself enough wiggle room, right? I know since this is a daily chart and I'm in a longer time frame play, I can be more liberal with my stop losses, but my goal is to move it to the green as quickly as possible while still giving myself enough room for a pullback, which you can see happens on some of these wicks here, right? While it's mostly down, right? There was actually no green days here in this stretch, but sometimes there are. Sometimes you can get some crazy green days and wicks, but you got to move your stop losses while giving yourself enough wiggle room. That way, if you do get a pullback, all right, it's going to stomp you out in the green. And then you take what the market's giving you at the time. You wait, patience and discipline for it to hit another level of support and resistance. You wait for that price to come to you for your entries, and then you take another entry. And keep in mind, this works not only on daily time frame, but weeklies, monthlies, 4-hour, 1-minute chart, right? So we're focusing on the daily here. Don't get tunnel vision on just this. I think the moving of the stop losses is going to be one of the hardest things for most people to learn, right? So, I mean, this really should be a horizontal line, right? Not the crooked one, but when you move your stop losses down, when the price is going down like this is going to be the toughest part. This is not something I can really teach you. There's no rhyme or reason to it. It's more like a feeling in your gut, a psychological thing. What I will tell you is this. Your goal should be to get into the green as quickly as you can while giving yourself enough room for a pullback. Then you can start to be a little bit more liberal if you want to take on that added risk. This is something that you're going to have to just hone in on and play with and practice with. The biggest thing I can tell you here is you take what the market's giving you. If you get stomped out, you get stomped out, right? What you don't want to do is revenge trade that stomp out. You got stomped out in the green, take that win, then just wait for another level of support and resistance, right? And if you're on a daily chart and you want to find support and resistance levels, go to a smaller time frame and see what it's showing you, right? Find support and resistance levels. Maybe you can find an entry again, but wait. Discipline. It'll come to you. You just want to trade. Don't throw it all away by trying to catch a falling knife. Eventually, you'll start to understand how the market moves and the market psychology, and you're going to hone in and make better decisions with your stop losses, right? But try to get it in the green as quickly as possible. Take what the market's giving you, and then just move it down slowly, right? It's like a trailing stop loss. You're trailing the price. And if it hits it, oh well, you're in the green. You made money. Congratulations. Just wait for the next one. The biggest mental hurdle for traders, right, is the FOMO, right? Like Bitcoin price is crashing. I mean, we had 3 negative days here where Bitcoin went down 10%, right? On this third day, maybe this was a weekend or something, you weren't trading, but you're not in a trade right now, and you think to yourself, hey, this is going to go down more. It just is, right? I mean, the price has been dropping. So let me enter into a short, and then what happens? The price goes up. So you need to avoid FOMO, right? I mean, if you wouldn't have charted this, if you would not have charted this, you wouldn't have known that we're at the bottom or towards the bottom of the channel. Like I said, it doesn't have to always hit the bottom of the channel. It doesn't, and it's not going to every single time. Sometimes you're going to come maybe 1% above it before it starts coming back to the top side. You have to wait for it to hit a level of support and resistance, whether that's on the book maps, the psychological levels we talked about, VRVP, value area high, low, PLC, something. You got to just wait. Don't FOMO in. I'm telling you, FOMO is going to get you stabbed. You don't want to catch falling knives either, like we had recently. So let's get rid of this. You know, this is a fallen knife, man. This is that, and you guys all remember this. This just happened last Thursday where it dropped 14% in a single day. There was a lot of people who fired off a bunch of shorts down around here, right? Tons of them who fired off shorts, and they got instantly wrecked because the price bounced back pretty damn quick. You don't want to catch falling knives. You also don't want to catch rockets that are blasting off to the moon, right? Because you're going to get wrecked. Wait. If you have FOMO, wait for it to disappear. Wait for FOMO to disappear. Do not trade FOMO. If you feel FOMO, walk away. Beauty of crypto, baby, is it's 24 hours a day, 7 days a week, right? There's always the next trade. There's always that next resistance level. When you have a giant falling knife or a giant rocket blasting off, wait for it to catch its legs. Wait for a new range to form, then trade that. This last section here in this video, we're going to talk about shorts that break down, longs that break up, and then retest and fails and fake outs, right? So this is going to be kind of the bringing everything home here for you guys. And as always, if you have any questions, hop in Discord, right? Discord.gg/Alpha Aere. And I'll be more than happy to answer them for you because I'm probably going to forget some things or you need some things clarified. But here we go. So what's a breakout, right? Well, this is a breakout. I mean, you can see how the price, bounced off of support here. We tested resistance and the price just broke up crazily. This would be like a short breakdown, right? Broke all the way down, all the way down. This is the recent one. And look, this is a fail, right? Right here, this beginning of the year, right? Channel forming, nice bounce, boom, we failed it, right? But what happened, right? You got that retest, we broke back in and we shot up like crazy. And here's another, I'm showing you some examples first, right? This was that recent range we ran from about 21st of June. And really we started to lose the range around, right here around the July 17th. So pretty solid tradable range, right? Touch support and resistances a bunch of times. There was some crazy wicks in there, but sometimes you got to deal with those crazy wicks. It's got to be a little more aggressive, right? And just know that that's what's happening when you're in that range. But you can see it started to break down, right? The range started to break down. We came out, retesting. The retest failed, right? So we couldn't get back in and the price dropped out. You can see how that acted as resistance a bunch. And then eventually what happened? We just couldn't hold it. And then boom, that broke down to the downside, right? A lot of people got wrecked down here. Like I said, they went short and it bounced back. And now we're kind of ranging out again. This is my approach. This is how I approach everything we talked about, from long, shorts, breakdown, support and resistance, FOMO, moving stop losses, entries, etc., right? Buy support, sell resistance. So here's the fixed range volume profile, right? Right in the tools, right here. You draw it from the candle to candle. This is on the hourly chart, just for the purposes of this video. So you got touches here, bunch of touches in here. It's kind of the start of your trend, right? So you got your support and your resistance level. So, you're going to want to take a long, price starts going up. And then what do? Let's draw my stop loss. Let's say that that's my stop loss right there, right? Enter into a long off of this yellow circle here. Price starts going up. I start moving my stop loss up. I'm trailing the price, right? Price goes up more, right? I'm moving my price up more. Price goes up more. I move my stop loss up more. Price goes up more. I'll move my stop loss up more, right? Starting to get towards the top of the range here. Starts to turn around a little bit. Hits my stop loss. Guess what? I just made 1.47%. Times that by 5, for example, right? There you go. Trend's getting stronger now, right? So it hit my stop loss here, right? I'm probably going to wait. I'm probably not going to take a trade here because it didn't quite touch the top of that channel yet. So I'm going to wait because I got stomped out. POC happens here, right? I'm going to enter into a long off the POC because we got to bounce, move my stop loss up, rinse and repeat. Now, this isn't a great range. This isn't a great example. You can see it started to break down here. So if you entered into a short here, for example, how I would approach this is I'm just moving my stop loss down. So it looks like this channel is going to break down, right? I don't know if it's going to, but if you're already into a position, just move your stop loss down. And eventually, right, it's going to swing the other way and the price can come back up and you get stomped out. It's going to retest this channel. So this is that retest, right? So you just got to wait. You got to have patience. I'm not taking a long down here, right? This happened pretty quickly. I'm going to wait till we start getting back into the range. So we're retesting the range. We did break back into it. That's where I'm taking my long position right here once we solidly get back in. And you can drill in 7-minute charts. Boom, there it is. So you can see the retest, right here. Boom, we came in, retested the channel, bounced up. That's where my entry is going to be, is off of the retest in most cases, generally speaking, right? You got to wait for that retest of the channel before you take into a long. And then it's the same thing. You're in your long position, you move your stop loss up. Probably would have gotten stomped out here. And then we're at the POC. I'm probably waiting, low volatility, et cetera, et cetera. Because guess what happens when you wait? This is a 7-minute chart, mind you, right? So it happens pretty quickly. We come in and we tap that value area low. Good place for a long position. And then we're just rinsing and repeating. We're moving our stop losses up as the price goes up. Now what happens, right? We're getting a breakout of the channel. This is a weird range. We're getting a breakout. I'm moving my stop loss up. Now, I probably would have been stomped out here. I probably went to cotton this, and that's fine. Then I'm just waiting to see what's going to happen next, right? And we retested the channel, but guess what, right? We won it. Like, this was a bullish retest. So we stayed outside the channel for a little bit of a while. I would have probably still waited until I saw this retest failed. And then I would have entered into a short position. Probably would have gotten stomped out right here, rinse and repeat. So your biggest tool is your stop loss once you're into a position, right? To save yourself, you're trailing it. You're trailing the price. You're probably going to be more aggressive with your stop losses at the beginning when you're learning. And you're probably going to be getting stomped out more and more and more. So you start to understand how the market moves and how the current range that you're in is moving. So I handle all of this stuff, right? Shorts breaking down, longs breaking out, retest and fail retest by my stop loss. I mean, it really is that simple. So I move my stop losses. That way, if we get a breakout, I'm just trailing the price, right? If it starts to swing the other way, I'm getting stomped out in the green. Then I'm practicing that patience and discipline. I'm waiting for us to kind of get back into the channel, retest the channel. So we retested the channel, bounce back out. I'm not taking that. Retested, bounce out. I'm not taking that. Retested it, starting to fall in. That's your breakdown. That's your failure point back into the channel. That's probably where I would have entered into a short and trailed the price with my stop losses accordingly. And it's the same thing on any time frame, whether it's a 3-hour here, right? You know, here's your channel, right? I'm just going to quickly draw this. Boom, boom. You know, you take your shorts, and as the price goes down, you move your stop loss down, right? It didn't make it to the bottom of the channel here. It came back up, but it hit your stop loss, right? So then what do? Do you take a long there? I probably don't, right? Unless I'm seeing support and resistance or something else that it bounced off of here, which it could have been there, right? Maybe you saw something. But I'm waiting, right? Because guess what's going to happen when you wait? It's coming back up to the top of the channel, and that's not a great drawn channel, right? It should have been something like that. But it's going to come back to the top. It's going to come back. You're going to get an opportunity, whether it's off of a liquidity node, some liquidations or something. You got to just wait. If you get stomped out, don't try to hop right back in, baby, right? Analyze the market. It's going to come to, it's going to hit you. It's going to previous support and resistance. It's going to hit something for an entry. Don't take blind entries. Don't just blindly trade. You just want a position, wait, right? Because guess what? Boom, there's your next short opportunity. And that takes us all the way to the bottom of the channel, right? Now, this is where it gets a little crazy here. Coming up, right? And then it came back down. But guess what? You're moving your stop losses. To hit it, you wait. You wait till it hits that bottom of the channel again, baby. You take a long, right? And you just rinse and repeat this over and over and over again. Sometimes you're not going to catch the breakouts. Maybe you weren't in a trade in this range here. Maybe you had some stuff going on. You sit down at the computer and you see and you say, hey, we're at the top of the range here. You know, I'm going to take a short, right? I'm going to take a short at the top of the range right here. And then it just blasts off. You lost one. Boo-hoo. Move on, right? Because over a long enough period of time, if you practice everything I'm telling you to practice, you're going to win way more than you lose. So big deal. You lost a 3%, but you know, you hit this channel and you made 200%. Big deal. Move on. Wait for it to the breakout to catch itself, form a new range, start trading it again. So you're going to lose some trades. I lose trades. You're just going to lose some, right? While this should have bounced to the downside, right? It broke out. However, if you took a long position here and you trailed it with your stop losses, you would have caught this breakout. So that's why I'm saying trail the price with your stop losses. You know, take what the market's giving you. If it gets stomped out, wait. Don't FOMO in. Don't revenge trade. Don't get excited because you just won a trade. Just wait. The price and the range and the liquidity will come to you. You'll get a bounce off of support and resistance somewhere. Watch and wait for retests when you leave the range. Obviously, this rocketed up. We didn't get a retest here. But if we break out, wait for a retest. And if it's successful, that might be a good place for long, depending on what the market looks like, the psychology, support, and resistance levels. Same thing. When you start to break down, you got to wait for that retest, baby, because guess what? You could be right back into the channel. And again, with trailing stop losses, you're going to catch those. I think that's it. Hour-long video for the most part, showing you my approach, how I use trailing stop losses to catch any kind of breakouts, breakdowns, talking waiting for FOMO, moving stop losses, how that's the most important thing and probably one of the hardest things for someone to grasp. It took me a while to figure that out. It's going to take you a while to figure out how the market moves. Get into the green as quickly as possible. Start moving that stop loss. Probably be a little bit more conservative to start with. Then as you start getting better and better and better and your eye starts getting trained, you can start to become more liberal with your stop losses when you're in a range. Whew. Appreciate you guys. Like, comment, subscribe, turn on notifications, hop in Discord, discord.gg/Alpha Aere. Giving away the alpha for free, baby. At least for now. First 100 active members who join are going to get it for free for lifetime. We'll be back for another video here. We're going to take some more suggestions from the TA channel in Discord. That's pretty much it. Appreciate you guys for watching. Air out.